7 out of 11 sectors in the S&P 500 closing in correction today. Despite the chaos, a number of stocks are still holding up. Bob Pisani is breaking down those sell-off survivors for us at the NYSE. Hey, Bob.
Survivors is what we all feel like at this point, Melissa. It was another late-day sell-off, but it was a very split tape. Cyclical names like technology and industrials were down big, but consumer names were mostly in the green. So Procter & Gamble, Walgreens, Johnson & Johnson, Coca-Cola, all in the green, and for the most part remained in the green even during the midday sell-off. Other defensive names, so pharmaceuticals like Merck and Pfizer, housing-related stocks like Home Depot, food stocks, Kellogg's, General Mills, for example, they were all up. All right, so what does it all mean? In terms of sectors, it's a defensive move for sure. So consumer staples, utilities, even gold, all in the green this month. Remarkable given that industrials and technology, the two groups most sensitive to global growth and trade-related issues, are both down double digits. That's a remarkable divergence there. For investors in broader themes, it's again reviving the whole growth versus value story. So growth, which is mostly tech, down notably this month, about 12%. Value, mostly consumer staples, banks and energy, down, but not as much, about 7%. And it would be a lot better performer if it wasn't for the fact that it has a heavy weighting in energy, which is down. So value tends to outperform in periods when growth is stronger. And traders argue that may or may not be the market we're in now. My feeling is the jury is still very much out on this debate. Back to you, Melissa.
All right, Bob. Thank you. Bob Pisani at the NYSE. So with such a volatile market, where should investors hide out? We thought we'd ask the traders. Grasso, you're going classic defense here.
Classic defense. So you go into XLU, which is the ETF for utilities. Since October 3rd, that's when the market started selling off. The market's down over 11%. Utilities are actually up 4%. So utilities seem to me like a best defensive play.
You're going fast food.
Look, casual food, casual dining, but definitely McDonald's and Starbucks. Look, McDonald's, while the bar is always low for these guys, or it has been on same-store sales, they had a nice beat on same-store sales. They just reported they're continuing to innovate, according to, I think, both health trends and just where the millennial group is going. But ultimately, this is still a global story. And McDonald's has been very defensive. McDonald's actually rallied about 5% in October to name my stand. Starbucks, it was so overdone. At this point, it's had a major rally back. If anything, Starbucks might be a victim just of some technical correction in its own shares because I think it got oversold, but now maybe is a little lofty.
These also feel like they have the tailwinds of being sort of idiosyncratic stories. I mean, McDonald's had really great earnings. It performed well off those earnings, and Starbucks is a turnaround story in progress at this point. Do you see value in these stocks?
McDonald's, I mean, it's done great, but in terms of value, it's not so cheap to me. I mean, it's not so, but I do think it's somewhat insulated from some of the things that are, spooking the market. But I probably wouldn't buy it right here.
Spooking. I mean, nice word.
Oh,
We're Halloween week.
Yeah,
Girl. Nice job by you.
Love Halloween.
Yeah.
No, you don't. You don't do the costume.
By the way, we talked Survivors, Guy. Do you have an opinion about Survivor, the band?
Survivors?
The band Survivor. Weren't they the ones that did that horrible Rocky song?
Yes.
Eye of the Tiger. Anyway, we digress.
But it is one of the worst 5 songs ever written. I'll get a lot of hate for that.
But back to McDonald's and Starbucks.
Cafe Mac's on fire. So where's my hideout? I'm not big on that phrase, but I will say that big cap pharma's done pretty well. You look at Eli Lilly, for example, has had a heroic move, has every opportunity to sell off in a meaningful way, given that move, and we find ourselves, 6 or 7% off an all-time high. And Pfizer drug, again green today, has done really well ever since President Trump tweeted about, basically, I'm paraphrasing again, but big cap pharma ripping us all off. That stock's been basically a rocket ship since. I think they still make sense in this environment.
How do you think about places to hide out?
Well, I think of what are the least problem children in my portfolio now? And Anthem really comes to mind. I mean, this is one, it obviously is not in any way a China trade story. They actually, in terms of rates, they would actually do better. They have a tremendous float from the insurance business. But I think that it's not super cheap, but the business is doing well. They're just sort of grinding it out. And I don't think we'll see on, I think they're going to report on Wednesday. But I don't know, this is the kind of name that's somewhat insulated and, somewhat tied to employment. So I like the fundamentals here, but it's not rock bottom cheap.